All right, it's the holiday season again, and that's got us thinking about gift giving. In this video, I'm going to explain what business owners should know about giving gifts to employees. I'll also talk through the different types of gifts from CRA's perspective and the tax implications for each gift type. We'll also explain when you actually need to remit extra payroll deductions when giving a gift to an employee, because nothing says the holiday season like giving money to the tax man. Lastly, we'll look at the tax implications for your employees when they receive different types of gifts. So all that and nothing else coming right up. All right, the team here at Avalon have all filled out a survey to show what their appreciation language is. So some people prefer words of affirmation, so we try to always say, hey, great Jorb, eh? When we're appreciating their work. For other employees though, the language of gifts is more up their alley. So for this reason, we've implemented an Avalonian gift giving program where we cover the costs for team members to send gifts to each other just to show their appreciation. It's just a small thing, but it's also lots of fun for team members to get a surprise like pumpkin spice latte or something at their door on a random Tuesday. I guess the point I'm trying to get to is that gift giving, whether around the holidays or not, is a great way to improve a team's morale and create employee satisfaction. So if you're giving gifts to your team around the holidays, it's important to understand the tax implications and any steps you might need to take to make sure that you stay compliant. We'll start with cash gifts because that's a common one around the holidays and usually most popular type of gift for employees to receive. Giving an employee a cash bonus, whether it's a performance-based bonus or a Christmas gift, will result in a deduction for the business and a taxable benefit for the employee. This means that the gift will be included in the employee's income. The employer will also need to calculate the payroll tax withholdings on this taxable benefit. So these payroll deductions are then remitted to the CRA in the exact same way they are with other employees' wages. So the important thing to understand is that you're actually giving your employee a dollar amount that is net of the payroll deductions. For example, if you want your employee to receive $200 as a gift, you'd actually have to calculate up the gross amount and subtract the appropriate amount of deductions to arrive at a net payment of $200. So you can use your payroll software or the CRA payroll deductions calculator to make this calculation. We've put a link in the description below to the CRA calculator, so if you want to try that out there. So the gross amount of the gift and the employee's source deductions both get included on the employee's T4 at the end of the year. From this, we can see that the $200 gift might actually cost more like $300 for the business. So good to keep this in mind when giving out cash gifts or bonuses. So summarizing cash gifts, we have a tax deduction for the business. The gross amount of the gift is taxable for the employee, and payroll remittances must be calculated and remitted. You'll need to include the gross amount and source deductions in the employee's annual T4. Okay, well, if cash gifts sound like a bit more work than expected, what about gift certificates? You know your employee has always wanted to go to scuba diving and you decide to buy him a $200 gift certificate at Esteban's School of Scuba. This certificate will actually be considered a near cash gift in the eyes of the CRA. And near cash gifts carry a tax treatment that is the same as a cash gift, unfortunately. The business will have a deductible expense, but you have to, again, calculate the appropriate amount and type of payroll source deductions on this type of benefit. The gross amount and the payroll deductions just get added to your employee's T4 just like the cash gift did. So summarizing gift certificates and other near cash gifts, we have a tax deduction for the business, the gross amount of the gift is taxable for the employee, and payroll remittances must be calculated and remitted. You'll need to include the gross amount and source deductions on the employee's T4 annually. All right, next up we'll look at non-cash gifts, or stuff as I like to call it. So when gifting stuff to employees, the business will get a tax deduction. If that stuff falls under the category of meals and entertainment, then it's only 50% tax deductible for the business, as with all meals and entertainment. But what about for the employees? Is the non-cash gift a taxable benefit? So the official line from the CRA on this stuff is a gift or award given to an employee is a taxable benefit from employment, except for an exemption for non-cash gifts and awards in some cases. Now that doesn't sound very charitable, but I guess that's the way it is. So what are those some cases CRA is talking about where the gift isn't a taxable benefit? So first off, to be considered for the exemption, the gift must be for a special occasion, such as a religious holiday. I'm not sure if Festivus counts for that, a birthday, wedding, birth of a child, etc. Secondly, the gift can only qualify for the exemption if the fair market value of the gift is $500 or less. Now you might be thinking you could get around this by buying multiple $499 gifts for your employees, but CRA is already ahead of you on that. The rule is actually that the combined fair market value of all non-cash gifts given to an employee in a given year can't exceed $500 for the gift not to be considered a taxable benefit. Now that's a mouthful. So if the fair market value of the non-cash gift given to the employee in a year is greater than $500, then the taxable benefit is calculated on the total amount less $500. So said another way, if you gave an employee $600 worth of gifts, then the taxable benefit would be $100. That's $600 minus the $500 exemption. Now this taxable benefit also has to go on the employee's T4, but you only need to withhold and remit CPP and income tax. No EI deductions for non-cash gifts, which is, I'm sure, a payroll nightmare. All right, one last thing on non-cash gifts. Items of small or trivial value don't have to be included in the total fair market value calculation. So if you have an employee who loves collecting coffee mugs and company t-shirts, then you might be dealing with a hoarder, but at least they don't have to include the value of those gifts as taxable income. All right, so here's the summary for non-cash gifts. They're deductible for the business, but only 50% deductible if the gift is classified as meals and entertainment. They're not taxable for employees if the total value received in a year is less than $500. Once you've hit the $500 mark, all non-cash gifts are taxable income for employees. Now, the taxable income would then need to be included on the employee's T4, and the business has to remit CPP and income tax, but not EI. I bet you didn't realize gift giving was so complicated, and it is, unfortunately. All right, so the last thing I'd like to talk about is staff parties. So staff get-togethers can be a fun way of showing appreciation for your employees and a great way to do some team building. Staff parties fall under the tax treatment of meals and entertainment. So in general, that would mean 50% of meals and entertainment costs are deductible for a business. However, there are some cases where the costs can be fully deducted. So the main requirement for the staff event to be fully deductible is that it is open to all employees in the organization. If the event was just open to some of the group, like a management retreat, for example, it would only be 50% deductible. Now there can be up to 6 events per year that are considered 100% deductible, which is nice, but staff parties aren't considered taxable benefits for the employees unless the cost of the event is greater than $150 per person. And I always find this one a little bit funny. So if the cost of the event is greater than $150 per person, then the entire amount is considered a taxable benefit for the employee. For virtual events, the per employee threshold actually goes down to $50 per person. So clearly the CRA's take on this is let's have fun, but not that much fun. So any taxable benefit gets included in the employee's T4, and you'll also have to remit CPP and income tax on, I guess, really good parties. So like with the non-cash gifts, no EI needs to be remitted on these. All right, so let's summarize staff parties. In general, meals and entertainment costs are 50% deductible for the business. If the entire staff is invited, you can deduct 100% of these costs, and you can do that for up to 6 events per year. It's not a taxable benefit to your employees unless the per person cost is over $150 for an in-person gathering or over $50 for a virtual one. If you go over this threshold, then the full amount gets added to your employees' taxable income and their T4. And CPP and income tax need to be deducted, but not EI. Long story short, just keep it to a dull roar and avoid the top shelf booze and you should be okay here. All right, so after all of that, my recommendation is not to worry too much about all of that. Show your employees that you appreciate their work in whatever way suits them or your business. Recognition goes a long way to creating a positive work environment. Now, I'd love to hear your thoughts about tax treatment of gifts in the comments, or if you have some CRA horror stories on this topic, it's always interesting as well, so please feel free to share them below. Now, if you've enjoyed this video or it's been helpful at all, please hit that like button. We really appreciate your support. And if you like content like this or a small business owner yourself, please consider subscribing. We really appreciate the support we've got from this community and love building it. So don't hesitate to ask questions in the comments below as well. We do our best to answer all of them. So thanks again, happy holidays, and we'll see you in the next video. Cheers.